The everything crash may just be upon us. Let's talk through the situation in this video so we can get a better understanding of what's going down. But hey everybody, welcome. Thanks so much for joining me. If you're new here or if you haven't done so yet, welcome to the channel and please make sure to hit the subscribe button right down below the video. Thank you. I truly appreciate it. Let's talk through this. So to better understand this everything crash, we first need to understand where are we currently? Well, you've probably seen this all over the place. It's actually kind of hard to get away from it. You see it all over on social media, you hear about it on TV, you hear it on the radio, you overhear other people talking about it, or maybe other people are just confronting you and talking to you directly about it. But the stock market continues to rocket higher and hitting all-time highs what seems to be like almost on a daily basis. Meanwhile, on the other hand, we have the real estate market that is absolutely red hot, continues to move higher. Houses are selling at record speeds, at record prices. In fact, in some situations, you're seeing people come in offering cash offers, double the asking price, and in sometimes that is not even securing the deal. So this is absolutely nuts what is going on right now. But here's the situation. We need to first ask ourselves, is this sustainable? Okay, let's just look at it from a really realistic standpoint. Is this realistic and is this sustainable that is going on right now in the financial markets, as in stocks, ETFs, commodities, precious metals? I mean, all of it across the board right now. Real estate, another asset class. Is this sustainable? Well, the simple answer would be kind of it's two-sided. Yes, it is sustainable for short periods of time. Is it sustainable for long periods of time? No, absolutely not. A good analogy to this would be you're running a marathon. Is it sustainable to sprint the entire marathon? Well, for most people, probably not, right? You'd probably have to assume you probably can't sprint a marathon. However, throughout the course of a marathon, are there little bits and pieces of that marathon that you could actually sprint? Yeah, of course. But is it long-lived? No, it's probably maybe a tenth of a mile, maybe a quarter of a mile, maybe you can sprint, but that's probably about it until you're exhausted and you need to slow down, pull back a little bit, maybe you need to walk a little bit, whatever the situation is. But my point is, it's not sustainable for long periods of time to continue running at max all-out, full-blown speed straight ahead. It's just not sustainable no matter what you're looking at. The same applies to any market, whether it's the stock market, the real estate market, which happen to be two of the hottest markets right now that continue going higher. Now, of course, there's this belief out there that everybody thinks, oh, it's just going to keep going forever. This thing's going to the moon. It'll never go down again. Well, that's actually not really how markets work. In fact, they typically mark a high or mark a top on a market with explosive moves higher, like what we're seeing right now. That is typically marking the top of a market. When you see these huge parabolic or hyperbolic moves higher, that's typically the highs in a market. Because what happens is everybody's been sitting on the sidelines for a long, long time saying, I'm going to wait for it to pull back. I'm waiting for it to come down, and then I'm going to buy. Well, guess what? It never happens, so it keeps going up and up and up, and everybody says, fine, I'm throwing in the towel, I'm getting in because I can't stand on the sidelines anymore. I have a fear of missing out, otherwise known as FOMO. Have you ever heard of that? Fear of missing out. So all these people have FOMO. They start jumping into the market saying, that's it, I can't wait anymore, everybody's making money hand over fist right now, I've got to get into this thing. Well, then they pull the rug out from underneath everybody and then whoop, there it goes, goodbye, and everybody is stuck at the top holding the bag. Now again, I don't want everybody to be upset. I don't want anybody to feel like, hey, you're making fun of me. I'm not saying that at all. I'm just saying this is what happens every single time. Look at the highs back in 2000. If you look at like a monthly chart or a weekly chart of the stock market back in 2000, you saw it. It ran really high, and then all of a sudden they pulled the rug out and the thing collapsed. Look at the highs from back in 2007, 2008. Exact same situation. Big moves higher. All of a sudden, the thing stopped in its tracks, reversed, and the rug was pulled out from under everybody, and just whoop, there you go. See ya. See you at the bottom. Essentially what happens. So now that we understand that this is not sustainable for long periods of time, we need to look at what is the function behind this and what ultimately is going to be like the pin that pricks the bubble that all of a sudden, explodes this whole thing. Well, It may have already been popped, and it may be in the process of popping right here, right now. Let's look at a couple different situations. First off, we have the eviction moratorium that is expired. We also have the foreclosure moratorium that is expired. Okay, so those are a couple different things pertaining to real estate, affecting millions upon millions upon millions of people. About 10 million homeowners. All of this just kind of pulled out from under them right here, right now. So all of this relief that just came out to all of these people, about 10 million homeowners, just all of a sudden evaporated. Okay, well, that's potentially 10 million homes that could be hitting the market here at some point relatively soon, as some people may be saying, hey, I just need to unload this property. I've had all these expenses. I can't keep up with this thing. I'm behind on my mortgage. I just want to sell it now and quickly get out of this thing before a potential foreclosure sets in, right? Well, that's what a lot of people typically want to do before they may be faced with a foreclosure that could ultimately destroy their credit score and their credit ratings, things like this. They may just say, I just want to get out of it. I don't even care if I lose money. I just want to get out so that my credit isn't destroyed for the rest of my life or for the next 7 or so years, right? So we have to look at that. We also need to look over the next couple weeks here, in about a month from now, all of these unemployment benefits that are going out to about 10 million people as we currently stand right now are going to be expiring. Therefore, 10 million people who are still unemployed at this time may just be losing all of their unemployment benefits. I mean, literally, snap your fingers and it is done. They lose their unemployment benefits. So here we have about 10 million homeowners that are just the eviction moratorium was just expired. We have the foreclosure moratorium expired. Now we have another potentially 10 million people going to be losing their unemployment benefits in a matter of just about 4 weeks from now, maybe a little less. So here's the thing. Is this a little bit scary going forward? That's 20 million people. I mean, that's just 20 million people that we're talking about right there. Now, of course, that doesn't even talk about everybody else out there who potentially is maybe in a tough situation right now that isn't even covered under unemployment or these evictions and the mortgage forbearance, all this kind of stuff. So what does that mean? I mean, for the real estate market, we could be looking at like a huge flash crash type situation going forward if all of a sudden all of these people just decide simultaneously, I need to sell this property, right? So with that being said, we need to look at that, the real estate market. Now let's look at the stock market for a second. Okay, so once again, we have all of these people jumping into the market, which, okay, fine. If you can jump in and make some money, then great. You got to do whatever best for you and your situation as far as your strategy, things like that. Of course, I'm not giving you financial advice, investment advice, stock picking advice, real estate advice. I'm not talking about that at all. I'm basically just talking through these situations. But we need to better understand what ultimately drives any market. Okay, we've got to bring it back to the very basics of all of this. What drives any market? It all comes down to supply and demand. I mean, realistically, who cares about the MACD on your stock charts? Who cares about the stochastics? Who cares about all of these other indicators, moving averages and trend lines and all that crap? I mean, seriously, who cares about it? That's all subjective information. You've got to look at objective information, supply and demand. It all comes down to willing buyers and willing sellers. Now, here's the thing. The higher that any market goes, doesn't matter what market you're talking about. You could be talking about stocks, ETFs, commodities, precious metals, currencies. You could be talking about bubblegum wrappers, real estate. It literally does not matter. Any market in the world. It all comes down to supply and demand. How many willing buyers do you have and how much willing supply is out there right now? Now, here's the thing. The higher that any market goes, by default, you automatically have more supply or potential willing sellers. Because here's the thing, who wouldn't want to sell at twice the price that they could have from a year ago? Like in the real estate market, for example. If you sold a year ago, well, you could have sold today for probably about 20-30% higher if you just would have waited 1 year. So by default, the higher the prices continue to go, the more tempting it is for people to start selling. Therefore, all of those buyers that have bought all the way up and are currently still holding, guess what? They are now technically potential sellers, therefore otherwise known as supply that may just could hit the market at any given point. And at that point, we need to start looking at, let's look at the demand side of the equation. How many buyers are out there that are willing to buy at these astronomical levels? Well, there's probably somebody out there, but If there's that big imbalance, there's a huge amount of supply, willing sellers, right? And then all of a sudden we have a small amount of buyers, as in demand, right? Demand for the products, the demand for the services, demand for the stocks, the commodities, the real estate, whatever it is, it doesn't even matter. We got to look at what about the demand side? Either the demand is drying up, or the demand stays constant, as in the same amount of people are willing to buy, but yet all of a sudden they get overloaded with a huge influx of supply, which ultimately, what happens when you get an influx of supply and there's not much demand? Well, going back to economics 101, we all understand prices must go lower to find demand. That's just what happens in any given market. So we're getting into this situation right now where all of these people are all of a sudden getting put into all these situations where they may need to start unloading a bunch of real estate. And or when you look at the stock market, prices are going up so rapidly, it's only a matter of time until people start saying, I'm going to lock in my 300% gain. Why wouldn't I? It would be ridiculous if I didn't. I bought this stock, I don't know, a year and a half ago, and I'm locked in for, a couple 100%. Why wouldn't I just sell it here and lock in all of my gains? It's only a matter of time until people start recognizing, this just isn't sustainable anymore. I've got to unload all this stuff. And then they start to, start selling all their positions on overloading the market. Ultimately, all that supply starts coming in, overloading the demand, all the willing buyers, and ultimately price must go lower. But it all comes back to a function of how much demand is there when all of this supply starts hitting the market. And that is going to be the telltale sign of how fast the market actually crashes, how fast it actually goes down, and where it actually goes down to, right? Here's the thing. There's always going to be willing buyers at some point. But here's the thing. Nobody knows where that big influx of buyers is going to step in once again and ultimately drive prices much higher. It could be significantly lower. It could be 50% lower. Look at Bitcoin and crypto for a minute. Bitcoin was trading at what, like 65, 66,000, something like that, not that long ago. And where is it now? Well, what I should say is, where was it just a couple weeks ago? Sub 30,000? That's more than a 50% crash in the crypto market. Look at other coins. Look at like Ethereum. Again, over 50%. Litecoin, that's way more than 50%. You could look at Doge. What was that? Almost 80% lower from where it topped out. So, here's the thing. All markets essentially do the same thing, right? They go significantly higher. They go parabolic higher, hyperbolic moves higher, just like crypto was doing. All of a sudden, somebody pulled the rug out from underneath, and then boom, 50, 60, 70, 80% lower, and there it finds a bottom, right? Just gotta pay attention to this stuff. Look at this stuff logically, rather than looking at all these ridiculous indicators on your screen. Oh my gosh, the trend line is going up. Who cares? Who cares about that? Look at it from an objective standpoint, supply and demand. What are the buyers doing? What are the sellers doing? Is this realistic? Is this sustainable? Can it continue to move on much longer? Anything can sustain for a short period of time. Can it sustain for a long period of time? No. Basically, nothing can. So you just got to be aware of this stuff. You got to watch this stuff very closely, because all of a sudden, if you start buying into something now and all of a sudden the thing reverses, who's going to be left holding the bag? Well, you don't want to be that person, right? Nobody wants to be that person, but unfortunately, somebody has to be that person, because you can't sell a bunch of positions and get rid of a bunch of things if somebody doesn't ultimately hold that bag. Somebody has to do it. Yeah, just make sure it's not you. Yeah, it's an unfortunate situation, but that's just how any of these markets translate. They're all typically just kind of like a zero-sum game, right? For every buyer, there's a seller, and for every dollar that's made, there's a dollar that's lost, for the most part, right? So anyway, kind of hope this helps you out a little bit. Hopefully it gets you thinking a little bit about just kind of objectively what is going on out there in the real world right now with all of these ridiculous markets that continue to power higher. Yeah, there's going to be a lot of pain across the markets. At some point, there's going to be a lot of people who get hurt really, really badly, just like in 2000, 2008. It's going to be a bad situation again. But when that happens, well, we don't quite know yet. But it will happen. It happens every single time, and it will happen once again. Now, that's not me wishing that somebody gets hurt. Of course, I don't want anybody to get hurt. But that's just the realistic approach behind these games. Yeah, so unfortunately, that's what's going to happen. So anyway, hope this helps you a little bit. Hopefully, it gets you thinking a little bit. Hopefully, it gets you objectively looking at the markets a little bit more. Get rid of those indicators. Seriously, just look at price. Price is ultimately the only thing you should be looking at any chart. Price is what indicates everything, supply and demand. When you look at a chart, all you're looking at is willing buyers and willing sellers. You're looking at a chart of supply and demand. That's all it is, okay? Get rid of the indicators. It'll help you out a ton. Trust me on this one. All right, anyway, thanks again. Make sure to hit that subscribe button right down below the video. Share this with your friends, family, social media, or go back and check out any of the other videos that I have here right on the channel. So, thanks again. Okay.